What is going on YouTube? What is going on SoundCloud? What is going on iTunes? This is the IOST podcast number 8. I'm sitting here next to Dimitri and Mike, kind of sandwiched in here. How you guys doing?
Doing well, man. Happy to have Dima back. How you doing?
Yeah, I'm back.
It has been a while.
Man.
Yeah,
It's been some time.
You're gonna talk to us about the New York City trip in a little bit, right?
Yeah, well.
Okay, cool. So we got a lot to get to this episode. We got our own trip as a team to New York City Blockchain Week. We've got your trip to New York City, I believe, what was it, a week ago now?
Yeah.
And we have the Sutler addresses that went public so that you guys can see our transactions on the blockchain with those tier 1 quarter awards and a lot of topics to get to. So we'll shoot right into the episode. You guys got anything before we start? We had Kyle Chapman from Cosimo on as well, so that'll be on the latter half of the episode. So stay tuned. I know a lot of people were wondering where the interview was in our last podcast. We'll just stay till the end of the actual podcast.
Yeah.
At least halfway through.
Yeah, we'll figure it out.
Okay. All right. You guys are giving me a lot to work with today. So, all right. So we've got our New York City Blockchain Week. I'm going to talk about the events that we're going to. Are you guys excited to go? I know we're not going to Consensus because screw the $1,500 tickets.
It's a waste of time.
I think that's the overall consensus. Not going to Consensus. I'll move closer.
Dima's been drinking, as you can tell. The cheesy jokes are coming out. We're, me and Dima, we're more of, drink during the middle of the day kind of guys.
Yeah, more of a coffee guy. Yeah. That's going to be a running joke for the rest of the podcast series. So we've got a lot of events that we're going to. We've got Black and Blockchain with Arthur Hayes. On Wednesday, we're going to Proof of Stake Protocols and Validators. We also have a lot of the invite-only events because we're really cool that we'll be going to for Ledger as well as some other VC firms in Crypto Mondays and Crypto Tuesdays from Crypto Oracle.
Yeah, there's some good events there. Black and Blockchain is a really interesting one. First thing on Monday the 13th, Arthur Hayes will actually be speaking in like a fireside chat kind of thing. So, it'll be interesting to see kind of what he's talking about. I know one thing he wants to unveil is the BitMEX research that they've done on IEOs. So, we haven't seen a ton of really formal research on IEOs from anyone yet. So, I'm interested to see what he's got going there. And then, the whole point of us going to Blockchain Week, other than just to have a good time, is to, certainly spread the word about IOST, right? Some of the projects that we're working with behind the scenes, some of the projects we're trying to bring to IOST. As you'll see in the interview we did with Kyle, IOST still is very much under the radar in the U.S. So it's a great week to kind of go out, meet the necessary people that you need to meet and spread the word. So
Dima's got to go to that event to get all his money back from Arthur.
Yeah.
So other than that, I mean, we are going to New York City. We'll be there May 13th through the 17th all week. So we've obviously been pushing that on our social media. So if you're going to be there, let us know. I know a couple people reached out to us via our YouTube video. So we'll have to meet some of you guys while we're there. Dima, you went to New York City, I believe it was a week to a week and a half ago. What were you there for, and kind of recap your trip for all the viewers out there?
Overall, New York is great when it comes to crypto events because they have them pretty often. And so my goal was essentially to go to these startup meetups where essentially you have actually a combination of traditional startup and like blockchain startups and see, what kind of projects are out there, basically, trying to raise funds. The idea was to essentially spot, really good projects and find out if they've already decided on which, blockchain they're going to be building on.
Gotcha.
And, if they did decide, then, essentially find out what was, why did they make that decision or over other protocols, and then essentially talk about IOST and essentially introduce IOST to them to see if they would be interested on building on that specific protocol, which was the outcome was great because actually people that were not aware of IOST, they were very interested to learn more, so that was very good. A couple of projects that were really interesting. We're still, keeping in touch, and essentially in talks with them. And then the other half of the trip was to meet up with VCs and capital groups to essentially kind of talk about the overall state of the market. What is their current interest? What are they prefer when it comes to projects, picking projects to invest in, what they look for, how has that changed since, last time, and so on. So all of those things were really interesting and kind of, build out the network of our capital groups all together. So
nice.
I think it was great, good times.
That's huge, man.
Yeah.
Awesome. Very cool.
Dima always has to make an excuse to go to New York City. That's pretty much what he did.
Yeah.
That's a nice story.
It was good.
Cool.
I left out all the partying, that happened.
True. So other than the New York City trip and we have the Sutler addresses that are public now. So the Sutler addresses are pretty much basically the addresses where those quarter one, tier one node rewards went to, correct?
Yeah, and where all of the rewards that the Sutler Ventures team, an entity itself, gets. If you go on our website, sutlerventures.com, there's a business paper there, right? Essentially our white paper, where if you haven't read it yet and you're voting for us or not voting for us, take a look, right? We basically break out our plan for all the effort that we're putting in, whether it's trips to New York to meet up with these VC groups or more of your institutional resources, or it's, bringing existing dApps or new projects to IOST, or just simply, talking to you guys, right? Keeping you up to date on the state of IOST. We actually break that down now with those public addresses so that every month, every quarter, you can see where the funds are actually going. And obviously we'll be transparent as to how they're being used. So take a look at the business paper. Essentially, as Q said, there are 4 public addresses alongside the Sutler, Sutler address that we're working with. Those are called Sutler Vest, which is going to be 45% of the money that we bring in through the node, which is going to be used for marketing IOST, marketing any projects that Sutler is working with, and then certainly making investments in the ecosystem. That won't be solely where funds are coming in for those investments, but it is a big part, especially as the network grows. So that's about 45% of where our allocation is going. The next piece is Sutler Team, so that's for us to compensate us for the work that we're doing. That's about 30% there. Sutler Legal, which is basically just a reserve fund, right? So as Sutler Ventures expands, as we make investments in the ecosystem, as we run giveaways, right? A lot of these things, because we're based in the US, have to run through a legal filter. So 10% of the total is going towards this kind of legal reserve fund, if you will, to make sure that we have money there to expand and make sure that we're doing things in the right way. And then finally, the final 15% is under Sutler Tech, which is the server costs essentially that we run. And if you break it down, the amount that we're sending to Sutler Tech, even at today's prices, is well and beyond what it costs to run the node. Obviously one of the things we'll talk about on the podcast here is the AWS partnership that IOST has signed. So it seems like it's only going to get easier to run a node, but it's important to remember to keep a view that's long term, because as the network grows, as the requirements to run a node grow, we want to make sure that we have those funds there, whether it's storage costs or it's actual hardware costs when it comes to the server. So those are all broken out there. You can take a look at any time. You'll have seen some transactions happening at the end of April. They'll happen at the end of every month where we piece those out. And you'll be able to follow along, whether it's the end of the month or it's the quarterly rewards or whatnot.
Yeah, I think one of the biggest things that node or block producers have as a responsibility is that transparency aspect. So that's one of the main reasons we're doing that in making those addresses public. So if you want to follow along, check those out. We do have a couple comments to get to. John B actually said in our last podcast, we appreciate the pod and YouTube tutorials. Placed a 7-figure vote for you guys yesterday on BIS. Excited to see how IOST progresses in the coming months. So thank you, John B, for that.
Shout out, John.
Yeah, shout out, John. We had Gordius Gordon. Where is the list of IOST apps? Not on dApp Radar yet. dApp Radar is actually in the works, I believe, with the IOST team. If you really want an up-to-date look on the dApps in the IOST ecosystem right now, it's going to be dApp.review and dApp.com.
Yep.
So we'll get into the meat of the episode here. The first topic we have is the actual IOST Play airdrop. That was a big thing over the past weekend. So essentially, and I'll pull it up here, IOST Play had their airdrop for playing on their platform. So if you bet a certain amount, this was a one-time airdrop. If you bet 50 IOST, you would get 100 iPlay. If you bet 500 IOST, you would receive 500 iPlay. And if you bet over 10,000 IOST at one time, you would receive 8,888 iPlay. So that airdrop actually sent their volume, I believe, over 250 million IOST, which was huge. It was big enough for the most volume out of any dApp on any network at the time. So congratulations to the team there. What do you guys think about that airdrop?
That's amazing. I mean, the fact that they jumped every other dApp, understanding that the dApps are still struggling with usage is pretty cool. IOST Play has been one that we've talked about a little bit. We've been talking with them behind the scenes. They're a strong team. I think they're going about development in their mining setup and staking setup in the right way. So it's good to see that with even something as simple as an airdrop that they're knocking it out of the park.
Yeah, me and Dima were having a conversation because at the time that they were hitting that 250 million mark, I was saying, hey, we should have got into this before the before the airdrop was announced or that volume really kicked up. And we were having an interesting discussion between users and volume and the ratio between the two. What do you have to say about that?
Yeah, no, it's interesting because the first time when you sent me over the stats, first thing that caught my attention is how many users they have and how much volume there is compared to other applications that are out there. So the ratio was skewed in a way where it's you had a very small amount of users but a huge volume. So you could think in a way perhaps maybe there's some whales there that are pushing the volume essentially for this dApp. Like right now I'm looking at it and IOST Play's got 24-hour users is 286 and the volume is 21 million.
Damn.
Yeah. While you're looking at like other dApps like IOST Joy, you have that's probably not a good example, but but like endless game, you have like 7.2k users and then 21 mil in volume. So it just something that caught my attention. We had a discussion about like what kind of users they're attracting essentially or whatnot.
Yeah. Dima basically said I was a dumbass.
Never,
in summary,
never that.
Yeah, I mean it's a wild world right now. Not only on IOST but on other protocols when it comes to dApps. It was really interesting to hear from Kyle in the interview that he really thinks dApps are kind of the next big thing, and you'll hear what he's got to say about that. But I think we're headed in the right direction. It's important to take a look at the details, right? But also take a step back and understand that like it's going to take a little while for these dApps to obviously really get going with traction. Yeah,
I was super interested in his response to my question about whether his firm was interested in protocols or dApps. Most of these firms are like, I want to eat up all these protocols, right? Well, I guess he had the opposite answer. So you guys can hear that in the interview later. So we had that coin super list. Anything else on IOST Play real quick? I think they're doing really well. We're going to try to have them on the podcast within the end of the month here. So hopefully David gets back to us and we can work something out.
Come on, David.
David, come on. So coin super listing?
Yeah, Coin Super listing just came out. Good news, IOST is getting listed there. They started deposits today, which is May 7th, and the actual trading is going to start on the 10th of May. So just, looking overall at the Coin Super exchange, just today they traded 46 million in volume, so not bad at all. One thing that really caught my attention is that they did biggest volume with Paxos and BTC, and they obviously have Gemini dollar on there as well.
Why is Paxos important?
Well, you want to open up the tether? Can't do this. I don't know how much time we have, but
Paxos has really kind of been coming to the forefront here when it comes to stablecoins. At least in the U.S., they're starting to really pull ahead, it seems, of some of the other ones.
Yeah. So the interesting thing is that the announcement said that it's going to be against the USD. So it's going to be interesting to see if IOST is going to be paired against any of these stable coins like Pax, Gemini, or any others besides Tether. That's something that I'm going to be looking forward to. And then also, of course, there's a giveaway
Of course.
of
Classic.
IOST to essentially stimulate trading on that exchange. 3 million of IOST giveaway. It's split up into 3 different competitions. Like, one, you just basically trade it and you get a certain amount of IOST, and then another, it's like basically a trading competition. For more details, I'm sure we're going to include, maybe a link to show more details on how to participate in it.
100%. Anything we talk about in the podcast, usually in the description of the video. So make sure you check that out.
Yeah. And let me see. I think.
Which one are you in?
Which
Which competition
Which
are you in?
competition? Yeah.
I'm going to hit all 3.
Good luck, sir.
Thank you.
So we'll move on to the next piece of news. That was the IOST and Nest partnership. I think Mike had the information with this partnership. Why is DeFi important on IOST?
Yeah, and before getting there, right, so Nest, it seems to me that announcement kind of went under the radar a little bit. I know we talked about it on the weekly update, I think, but this is one that when you look at it relative to some of the other announcements, sub maybe AWS or, really sub AWS, I think it's pretty important. Nest is interesting. It's a Asian-based dApp that's focused on DeFi or decentralized finance. We talked to Kyle at Cosimo on the interview a little bit about decentralized finance, but essentially the concept of DeFi is that it now brings over a lot of the tools that you would find in traditional finance into cryptocurrency and decentralizes it. So the most well-received concept of DeFi or product within DeFi so far has been the ability to borrow or lend various assets, right? So whether it's Celsius or Dharma or Compound or Maker has been the big one with their DAI stablecoin. That product or that kind of concept within DeFi has been big. It looks like Nest is focused on decentralized digital asset mortgage lending, which is the whole kind of rabbit hole within and of itself. They're based on Ethereum. IOST quotes some really strong user numbers. I think they had 10,000 users either currently or at one point. But broadly looking at this, what it allows IOST to do is to start working with Nest to build these decentralized finance applications within IOST, right? So we see this on EOS. I'm sure we see this on Tron. We certainly see this with ETH, with Maker. But I would guess that over the next few months, one of the first things that Nest and IOST are going to start working with is the ability to lend out your IOST or borrow IOST, because that's been so successful. So that's kind of my speculation there. I think that's what we'll start to see from Nest or other DeFi partners, because there's so much opportunity just even within the node ecosystem, right? And the other nodes that exist alongside us. If you can go out and maybe you're an IOST enthusiast and you can let's say borrow the now 8 million IOST required to run a survey node. You can go and borrow that for, I don't know, let's say 8%, right? 8% APR. But that
You'll make some.
That you're going to make 15 or 20 or 35% on running that node. Then it's a huge way to bring in additional survey nodes, even if it's just an enthusiast. And it's done in a decentralized way. It's done via smart contracts, so you don't have to worry about some centralized party going and asking you to repay that loan when maybe that IOST hasn't come back through the node reward structure yet, and thus putting you in a tough position. So that was one that I saw that I was hugely excited for, that I didn't hear a lot of kind of rumblings from in the community, that I think over the next few months could be really big.
I'm interested to hear what you have to say on this, because I know initially when they raised the survey node requirements to 8 million, you were saying that was because they kind of wanted to weed out those who maybe didn't put in enough time or enough work, essentially, and the quality of node is what I'm getting at. So when someone goes out and borrows the 8 million necessary, are they in the game for good, like what you're talking about with that? Isn't there some negative behind that?
There definitely could be, right? I mean, what you're getting at is basically the balance that the IOST team is trying to achieve with the kind of one side of the coin being the availability for proactive individuals or groups to come in and run a Survey node. With the other side of the coin, which is the balance of not creating a system that is either dominated by a handful of groups, i.e., say China in this case, which you see with Bitfinex and Huobi on EOS, but also not spreading it so thin that it makes it almost impossible for 95% of those nodes to make any money, right?
True.
So, in this example, if the minimum is 2.1 million, and I would imagine this is kind of the thought process that Jimmy and the team went through. If the minimum is 2.1 million and the price is a penny, it doesn't cost you very much to go and bang on a brand new node, right? You can do that over and over and over again, especially if you had some sizable funds. So what that does in doing that is bad actors could come in and pull away some of those contribution rewards or pull away some of those block production rewards from those nodes who are actually really contributing. So by raising it to 8 million, I don't think you're necessarily saying like, oh, we don't want any more Survey nodes. They're just ensuring that there's some sort of barrier to entry to ensure that the system isn't gamed.
So is that going to be something that's raised over time continuously?
Well, yeah. If the token price advances, right, that's essentially going to end up to be higher.
Okay.
Right.
Barrier of entry.
Yeah, that barrier of entry would increase. I mean, one thing that they've talked about since the start, since this node program was set up, was that rate was going to be variable, right? So originally, before it was 2.1, I think it was actually 10.5 or right around 10 million.
Right.
And they dropped it to 2.1 to ensure that, everybody could get in. They could, really ensure that those early contributors or early enthusiasts could lock in their node. Now that we're locked in, we've got 100 plus Survey nodes, right? Now we can kind of go and start to scale up it to 8 million. But if the token price jumps to 5 cents or 10 cents, you could reduce the number of IOST while still ensuring that barrier to entry is higher because the token price has increased. So it's good to see, right? I mean, it's one of those changes that not everybody's going to be happy with. If you were planning on a node and you bought 2.1 million and then they jumped it to 8, that'd be tough. That'd be a huge pain in the ass. But I think that the best thing contextually here is that IOST has not just kind of released this to the wild and is like, well, we'll see what the hell happens, right? They're continually looking at it, maintaining it, monitoring it, and improving it as they see fit.
Cool. All right, so we've got about probably 6 minutes left in this episode, so we're going to bang through these. We had Horse Saga and Fish Chain come out, or IOST came out with an announcement this week announcing that those two dApps would be released within the next, I would say, 30 days. So I know Fish Chain had a team behind it that actually had a released application that had a ton of daily active users, I think in the millions.
Wow.
So we'll do some research for that Fish Chain. Horse Saga is going to be something like a crypto derby where you have these. Essentially, these two dApps are the digital collectible sort that you see across the network. So you obviously get a certain asset, and you can breed, and you can crossbreed, you can train, you can do all kinds of things, and then sell that asset back.
CryptoKitties.
Kind of like CryptoKitties, yeah. That was the genesis, I think, of all of these digital collectible games, and these are just two more. I think it's important to increase the quantity of dApps on an IOST right now. I think all of these, dApps will continue to mature, and hopefully, we don't know much about Horse Saga and Fish Chain right now, and what type of quality. But right now, I'm concerned more with quantity. So it's good that these dApps are coming into the ecosystem.
Yeah, I would agree.
Cool. You got anything on that?
No,
you're not gonna have any horses or any fishes. What's up, man?
Never got into collectibles.
Gotcha. Yeah. So we'll see where that goes. When they get released, we'll obviously make announcements and add them to that dApp tier ranking list. So the last thing we had here before we outro is the AWS that was or IOST was integrated in AWS, correct?
Yeah, absolutely. It basically, as it looks like to date in that blog post. Now through AWS, it will be even easier to set up your node. Beforehand, IOST, from the start came out, basically said, hey, we're going to make sure that there's white glove service here, right? If you're not a technical user, we're going to walk you through this. It'll take 30 minutes, an hour, 2 hours, whatnot. Connor set up ours. They've helped a lot of folks, including us, set it up. And now I think they're claiming that it could take only a few minutes to run your node and kind of like this one-click solution through AWS. Is that right, Dean?
Yeah. Absolutely. And again, it just creates this easy, entry, but at the same time, we talked about how the entry of the requirement, is a little bit higher. So I guess, they're trying to compensate both sides. But yeah, overall, it's amazing news, the fact that it says the headline, you can set it up in 5 minutes.
Yeah.
So it's beautiful.
That's huge.
So are these for nodes in particular, or are they for dApps trying to build on IOST?
Looks to be a little bit of both. I mean, it's a short article, right?
Okay.
Like IOST has done a really good job of kind of ensuring that there's transparency with what's going on behind the scenes. This stuff can take a long time with legal, take a long time, just behind the scenes in general. So it seems to me like what their strategy has been, okay, hey, we're working on this, or this is in process. Here are the details we have thus far, but more to come, right?
Got it.
So.
Perfect. You guys got anything else before we go into the interview with Kyle?
I don't think so. I mean, I love the dude. He seems like a sharp cat. They're doing some really cool things at Cosimo. That NDAO token that he talks about is super fascinating with kind of like 4 different structures in a way to make it a store of value. And we'll see what we can do between Sutler and Cosimo, and really hope everybody enjoys that.
Perfect.
I'll see you guys in my hometown, New York. Super excited.
Yeah, we're dropping Dima here for the interview, and we're adding Kyle. So we're keeping the same amount, but we're dropping Dima, so you won't see him in the second half of the episode. But we'll all be in New York City next week. Hopefully we can get some, good content out there so that we can post it to you guys sometime early next week.
Yeah, absolutely.
Cool.
Cheers. Alrighty, we are back with another awesome interview for you guys. Today we have one of the partners at Cosimo Ventures, Kyle Chapman. Kyle, how are you? And appreciate you coming on.
Yeah, I'm great. Thank you for having me today, guys. It's a pleasure.
Absolutely, yeah. So tell us a little bit about Cosimo Ventures and what it is that you do for Cosimo.
Sure, yeah. So Cosimo Ventures is a boutique venture capital firm headquartered in Boston, Massachusetts. We have offices in New York and Dublin, Ireland. And we are launching our second fund at the moment called Cosmo X, which is a tokenized evergreen venture capital fund that invests in emerging technologies around AI, machine learning, and the blockchain space. So in particular, I focus on fintech investing, anywhere from payments to back office improvements that a company can make. So it's really a wide spectrum, but I tend to focus predominantly on fintech because in a former life I was a trader and had a lot of exposure to sort of settlement processes and payments and margin calls and movement of money in any kind of way you can imagine. So that's sort of my quick and dirty spiel there.
Yeah, that's great. We have actually a lot of traders in the office, so I'm sure they'd be interested in hearing from you on that front. What kind of projects has Cosimo invested in up to this point? Do you have any in particular that you can share with the audience?
Sure, yeah. So in our most recent fund, we have a select few blockchain companies that have been done particularly well. So one of them is Gecko Governance. They actually just won an award for the fastest growing Irish company in Boston. They're based in Dublin, and they're a reg tech company for blockchain companies issuing digital assets. So you can go to geckogovernance.com to learn a little bit more about them, but they are really up and coming in the space. I think they just closed another round of funding, so that's something that we're particularly proud of. Another company that is probably our largest company at the moment is called Oniro. And they are a blockchain development company that is currently working on developing a new digital asset on a native blockchain that is designed specifically for value storage, which is an interesting niche to sort of narrow in on when you come to the 3 buckets of digital assets, whether it's or really currencies, whether it's a medium of exchange, a unit of account, or a long-term store of value. And the digital asset that they're creating is called NDAO. And I can go into that a little bit more at the moment, but So Oniro is the company developing it. So we backed them I think it was in either late 2016 or early 2017, and they started to develop this digital asset called NDAO, and it's basically what we like to call a buoyant coin, right? So it's designed to rise in value as demand warrants, but while preempting speculative bubbles that are inherent in existing cryptocurrencies like Bitcoin and Ethereum and across the broad spectrum as you've seen. So it's designed with mechanisms inherent in the blockchain to promote long-term steady growth. So some of those features are really only can do it on a blockchain. So one of the I guess features of NDAO is that it's issued along a pre-established and public price curve that'll only issue new tokens as demand warrants. So whether in Bitcoin, some may argue that you can have that, and when you're mining, it's not economical to mine if it's below a certain price,
right.
And more people will flood the market if it's above a certain price. But the problem with that proof of work model in mining is that there's a lag. There's a delay between the number of miners in the market and the price for that to reach an equilibrium. And you see that, 20,000 back to 3,000 sort of bubble burst that we all saw. But a pre-established price curve it's always there. So it's always being issued to sort of preempt those type of speculative bubbles without any lag. So that's one feature. Another feature of NDAO is that it has what we call a stabilization incentive burn. The implementation is complicated, but the idea is simple, such that if the market price falls below a certain threshold, transactions on the blockchain, so this is not intra-exchange because that's just within one wallet, but between multiple, like one wallet to another, there will be a tax and then burn if it's under a certain threshold away from the target price. So in effect, what that does is if there's a market downturn or downward market pressure, it will slow the velocity of money by disincentivizing people to sell. So you have less of a sort of flash crash potential.
Huh.
So there's really two more to sort of help this price remain buoyant, two more features. The third one, away from the target price curve and the stabilization incentive burn, is ecosystem alignment incentives. So that's basically if you hold onto your NDAO in a wallet, so off an exchange, you can receive ecosystem alignment incentive, which is like interest that you receive in kind in NDAO. So you could call it something similar to interest. You could call it sort of discretionary inflation type of effect. But what it does, it rewards people for holding long term. And you can actually lock your NDAO for an extended period of time to get higher rates of return on that EAI, the ecosystem alignment incentive. So while the SIB deters selling in a flash crash, the ecosystem alignment incentives reward people who lock even in a bull market. So there's that element to it. And then the final backstop we have is a floor price. So one of the appeals that a lot of investors like, and probably the main draw that we had, at least at the outset of this investigating what they were trying to build, is that every dollar that goes towards purchasing a newly minted NDAO, like primary NDAO, it goes into an endowment, and that endowment is used to establish a floor price at which, if the stabilization incentive burn isn't enough to prevent a sort of flash crash, the floor price will act as a buying mechanism to support the price in the future. And the price that's determined where we'll buy back NDAO and burn it to reduce the supply actually has the effect of, once we purchase and burn it, the floor price is higher because it's half of the floor price divided by the number of outstanding tokens is where they buy it back at. So the last person to sell their NDAO at the floor actually has the highest price they would get it at. And so this is really a fail-safe for creating a buoyant currency. It's
Sure.
really the people who hold on to it the longest, even in a down market, are going to be the best, the most well off. So,
that's fascinating.
yeah. It's a lot. So there's a lot to take in, and it's a very fascinating project. And we're actually about to go live on Bitmart on Friday.
Okay.
So it's a pretty exciting time here, and in Endau, the development, Oniro, the development team has just been outstanding in their work here. Yeah.
Bitmart is an exchange, right?
Yes.
And that's the first exchange listing for Endau?
Yes, that's right.
Gotcha. Cool. Yeah, we'll definitely keep track of that. We'll maybe on the next week's podcast we'll follow up and kind of see how it's been doing over the last week or so.
Yeah.
So
yeah, of course.
Yeah. So I'm super interested to see how these venture firms view protocol layer projects as opposed to the application level projects. How do you view the difference between the two? Are you more leaning towards one or the other? How does that work?
That's a great question. So I think we have a lot of, like, as operators of several companies, we have a lot of background in deep tech. So we're always sort of intellectually drawn to unique protocols on native blockchains, just because we think there's opportunity here to create unique governance, unique protocols, not just the way these new rules are implemented, but the types of rules that you can implement. So we're always attracted to those, but I think the largest opportunities from an investor perspective is going to be on dApps, on the application side. And it's really just about utilizing a blockchain network or series of blockchains to create a sort of two-sided platform. And that's a space that is really just beginning. I don't think that anyone has come out with like a killer dApp, a killer use case for blockchains that can, rise to the level of like a Google or a Facebook yet. I'm not sure that, if I'm being completely honest, I'm not sure that anyone really knows what that would look like yet. But we're definitely interested in a few companies. We're sort of poking around that space for sure. Yeah.
Can you give us any insight into what some of those dApps might be that you're poking around at, or maybe what protocols they're being built on top of?
Yeah. So a few. I mean, mostly predominantly on Ethereum now, unless Cardano does something in the near future that sort of changes their stagnated existence. But to be blunt about it, mostly predominantly on Ethereum. We're seeing a lot of use cases in the sports space, particularly sports betting. So some more on the derivatives side of things, which I think is the fintech guy, probably the most fascinating dApp potential there is. I'm happy to explain a little bit more about that as well, but I think that's primarily where it is now. It's not too far away from the primary uses of a blockchain, moving security tokens, digital assets, what have you. It's the same idea with smart contracts. And so that's the first level of dApps that we're seeing being applied to, different areas like sports betting and the derivatives market. But there hasn't really been a lot of, social network type of dApps, because you really, in that, you would like to sort of decentralize the data that's being accumulated and packaged and sold by a company like Facebook or Google. But for now, people sort of need, or they think they need, that intermediary to sort of be able to interact on that type of level with one another. So no one's really come out with a killer app for that reason. It's mostly functional, if that makes sense.
Yeah, I would say from my perspective at least that I think a lot of dApps have focused on the structure of the actual dApp versus how they're going to go out and achieve some sort of network effect or bring users to that dApp, whether it's social media or otherwise. So, within IOST, which is the project that we're really focused on here at Sutler Ventures, there's one app in particular. It hasn't migrated on chain yet, but it's from a protocol called BERM, BERM. And the application layer project is called BERMI, BERMI. And, them as an example, I think they're doing a good job of going out, building an application that people actually value and they use first, and then integrating some of the positives that blockchain or a native token would bring in order to further incentivize the growth of those users or the ability to retain those users.
Yeah, I think that's the right way to go about it. Whenever we're evaluating a company, blockchain has to answer how you're solving a problem, not why you're solving a problem, right? So you can't just build a company because it has the word blockchain in it. We've seen that ICO hype come and go, right? So I think that's the right approach. You have to do something better, faster, cheaper. Otherwise, you probably shouldn't be doing it, right? So
right, yeah. Within the derivative space, and to kind of pull back even further from that, it's almost kind of like the decentralized finance space to some degree within crypto and within fintech now. Where do you see us going next? Understanding that obviously the maker system and DAI and kind of some of its counterparts have really been the ones that have brought this whole decentralized finance concept to the front of crypto here in Q1, Q2 of 2019. I mean, what's next, right?
So I think a platform is so a DApp that can really take advantage of the increasing investor appetite for structured products in the traditional financial system. So, when I left trading, I guess it was like 5 years ago, the structured products group was the fastest growing group on the street, and it's interesting because you guys are traders, so you'll know that a structured product is really a Frankenstein of different financial instruments that currently exist. You have an equity, you slap a bond coupon on it, you sort of cap your upside and your downside by using derivatives, and people buy it. And so it's a product that's solving a lot of problems for institutional investors in particular, but using the instruments it's really become a blunt object. And when you think about or instrument, right? So if you think about utilizing smart contracts to execute on really anything, as long as there's a source of truth. So anything that Bloomberg could publish, you could link a smart contract to on a blockchain and have a derivative of it. So the effect of that, if you take it to the nth degree, is you can create structured products or any sort of derivative or swap that is just as complicated as any model that you could possibly create. And I think that's really where the future, in my mind, the future of derivatives are, both in the legacy financial system and in the digital asset, blockchain, digital economy world. It's really the ability to fine tune precisely what you want, with regard to market outlook and timing, that can rely on an infinite number of factors, so long as you have the counterparties that'll take the other side of it. I mean, it doesn't even have to be one counterparty; it can be several. If you fracture up your smart contracts into individual securities.
Right.
So I think that that's sort of where I see that going. I have my eyes out for someone who's going to be able to create a platform for large institutions, financial institutions, to sort of be able to implement these types of new smart contract structured products, I guess.
Interesting. Yeah, and it'll certainly it's yet to be seen what pros or cons will be had with those derivatives in the crypto space, because to date they haven't really existed, and obviously it's been a struggle of sorts in the traditional space. Yeah,
I actually raised the question to the head of ISDA the other day about what kind of regulation they're doing in these markets, or if they plan to do any. Because right now, regulators aren't really sure if a digital asset derivative market is going to exist in 2 to 4 years, whether let alone whether or not it's a threat to any sort of global economy, right?
Right.
So I think that everyone's kind of waiting to see, but I would, as I did, sort of caution them to be on their toes a little bit. I think it's going to be a market that kind of comes out of nowhere. Where there are eventually securities and commodities and currencies, you're going to have futures, forwards, swaps, and options. It's just a matter of time, right?
Right, 100%. And alongside that, alongside this kind of DeFi or decentralized finance wave that we've seen, another one seems to have been staking with Tezos and a handful of other protocols that have emerged. IOST is one as well that has a unique staking setup and some other unique contribution rewards and whatnot. But what are you guys seeing from your perspective as a venture fund with staking and kind of where that's headed for the rest of the year and into the future?
Well, I think staking is definitely the next step away from proof of work for sure. We've seen a couple unique models of staking. How long the tokens have to have been minted before you're allowed to stake them. Is it just a stochastic way of choosing a node validator, or is it more to that? Is it proportional to your stake? Is it not? Is there a ceiling on the number of nodes? Is there not?
Right.
The number, how much you can stake, or whatever. But I think the most important catalyst for proof of stake becoming more mainstream, and the coins, the tokens that are being staked themselves becoming adopted by non-validator nodes, just users, is sort of the notion that for a while it was sort of understood that, or it was believed, I should say, that there's no real way to model proof of stake tokens. Proof of work, you can kind of make the efficient markets argument that whatever your cost of electricity is to mint a Bitcoin, let's say, or win a block and get your block rewards, that's really the model for valuation. And proof of stake was people were reluctant to put that same model on it because there wasn't a cash flow. But I was just speaking with a colleague of mine at MIT, and there's some work going on about valuing proof of stake tokens in a way such that the rewards you are given from the amount you stake is sort of equated to a cash flow. And if you can equivocate that to a fiat currency by tying the opportunity cost and the time it takes to stake versus the rewards you get, you can actually come up with a relatively robust cash flow model. Of course, you also have to come up with the velocity of the currency there, which is not easy to do. But once these metrics are going to be a little more widely published and a little more reliable than they are now, just on any token for that matter, these cash flow models are going to incentivize more institutional investors to adopt proof of stake tokens. So I think that the quantitative world of traditional finance needs to catch up to proof of stake before these sort of old money institutions will come in. And I think that that's happening now. So if I had to make a prediction, I would say the proof of stake within the next 12 to 24 months is going to be the predominant method of I guess transacting and validating blocks.
It seems to be, yeah. With that kind of base incentive model for users as well, where they know that they can, get some exposure into this token or into this cryptocurrency, but then can obviously stake it for some reward. It could be argued to be more beneficial than a token that doesn't offer that. So it seems to be that at least within the hardcore cryptocurrency community, that is something that has been has been grabbed and kind of run with. So yeah, we'll definitely see. It's an interesting space right now. Take a look at IOST. Take a look at Burmy if you haven't already. They're really still behind the scenes when it comes to staking. Of course, it's been a pleasure to have you on the podcast here. We're just about wrapping up, but Cosimo's doing a lot. Like you said, you've got the Cosimo X tokenized fund as well. It looks like you guys are doing some podcasts and are on social media. What's kind of the best way to get a hold of you and Cosimo, whether you're an enthusiast in the space or you're an early stage startup looking for investment of some kind?
Yeah, just go to cosmox.com. Everything's there. You can get in touch with us that way. If we're opening a new fund, Cosmo X. So if you want to invest, or if you're interested in investing and taking a look at sort of what we've put together, the structure is interesting. Redemption is interesting, and our existing portfolio companies are interesting. So cosmox.com is where you can find us to learn more about us. So
Awesome.
Okay. Yeah, Kyle, are you going to be in New York next week?
I personally am not going to be in New York next week, but I think that our team is. Yes.
Cool. We'll have to catch up.
Yeah, definitely. We'll grab some guys over a drink or a coffee or whatnot, and meet some of the team in person.
Great. Sounds good, guys.
Awesome.
Thank you so much for having me on. It was a pleasure.
Absolutely. Always a pleasure.